Welcome, everybody. Glad to have everybody on. Um, for those of you that are on this for the first time, welcome to the Texas MFM chapter. So for those that don't know, right, MFM stands for Multifamily Masters. We're part of a larger group. And basically the idea is very much having a bunch of local chapters that all fly kind of that all share and learn and grow and kind of have the same brand, right? And from that, really what kind of has happened thanks to COVID, right, is that we've gone local. And so, we've gone digital is what I meant to say. And so in the past, everybody used to have their own localized webinars. And nowadays, kind of with COVID, right, we went virtual. And with that, right, we decided to basically brand a common one with the Texas chapters. And today is actually the very first time we have a new Austin chapter that started, and now they have kind of joined us to help continue to grow. And so for those that don't know, we're going to go ahead and kind of do a quick intro, right? We'll keep it brief, everybody, 10, 15 seconds, just kind of who you are and kind of the leadership that helps run the Texas chapter. And then we'll transition to our presentation. And for those that don't know, today's presentation is about raising capital, right? Who better to talk about raising capital than people that have done it, right? And done it multiple times on our panel. So we'll have a panel. I will moderate that panel and, I'll ask a lot of questions. I'll dive into topics that I know people are interested in. But if you do have questions, comments, please go ahead and plop them into the chat, and I will moderate those as we continue. So we'll do that for about 30 to 40 minutes after the intros. And then at the very end, right, we will do what's called breakout rooms. And so hopefully by now everybody has seen breakout rooms. I like to think we were one of the first ones to do these way back when, but we will break up the audience into groups of, small groups of 5 or so people, right? The idea is very much that partnerships happen by people right? And breaking up the audience into smaller groups allows you to build those partnerships, right? That turns into deals, that turns into companies, that turns into anything else. I mean, heck, I met Ben at a meetup, actually, the original cantation of this meetup in person many years ago. So maybe that. With that said, I'm Feras Moussa. For those who don't know me, I help run a company called Disrupt Equity. We're based here in Houston. We have properties throughout Texas and Atlanta. And we are looking to continue kind of buying and acquiring assets. And so we've done multiple deals for full cycle. And we also have our own management company, Disrupt Management, that has continued to grow as well. And I'll hand that off to Ben. You want to do a brief intro?
Yeah, well, you did a good job. So I'm the other half of Disrupt Equity. Some would say that I'm the smarter, more handsome half, but Feras does do a few things like a great intro. But no, all kidding aside, we appreciate everybody tuning in tonight. I know, it's taking time out of the family, but this is important stuff, folks. Raising equity is a vital component of getting into bigger syndication deals, and you need to know how to do it. You need to know how to do it correctly. So Ben Suttles, Disrupt Equity, like Feras said, we have property management. It's called Disrupt Management. But me and Feras ultimately love to build businesses, and acquire assets. We're also partners with Anton Matley on Peak Financing, as well as Dan Kadirka on Strategic Insurance Group. We have a few other ventures and, have some great projects in the pipeline that we're looking to, kind of keep our summer busy. So, but hopefully I can add some value tonight.
All right. So I'll go transition to the DFW group. John, you want to go first?
Yeah, absolutely. John Monteiro, based here in Frisco, Texas. I'm a developer, a syndicator. We have, with other co-GP partners and our investors, 4,800 doors in Texas, and just excited to be here and looking forward to the conversation tonight.
All right. Thank you, John. Let's see, Ronny, you want to go next?
Sure. Ronny Philip with the Kingland Group, a real estate private equity firm based in Dallas, Texas. Primarily focused on large A and B multifamily across the Sunbelt region. Currently at 572 units across Texas and Georgia. Happy to be here.
And Ronny is the king of Clubhouse too, all right? Stop selling yourself short, man. There we go. We got a smile out of him, man. He's excited. He's excited to talk about raising money.
He's got a good beard. He's got
the beard game,
All right. So let's see. Next up, Anton.
Hi, everyone. Anton Madley, co-founder and CEO of Peak Financing. We help investors with their commercial real estate needs. On the financing side, we finance all across the country. Strong focus on multifamily, and obviously over the last year or so, multifamily has been on fire, and that includes also on the lending side. Good news for anyone here who is looking for value add deals that need bridge loans. Bridge lenders are right back in full force, so you have a lot of options out there. You just have to watch out which lender you work with and which one you should avoid, and that's where we can help you.
All right, thank you, Anton. And we will shift over to our new our new Austin group. And so with that said, do you want to, Daisy and Luke, you guys want to go first?
Yeah, sure. Thank you for having us, guys, and for inviting us to be part of the Texas group. We are excited to be here in Austin, based in Austin, recently out of California natives. Luke and I are a husband and wife team with Make It Rain Capital. And we also have a podcast called Make It Rain Podcast, focused on providing more access for millennials to invest, and really here just to network, meet other people. We're passive investors in San Antonio, in a few hundred doors, and recently are going through the process on our first deal here at CC. So definitely, excited to be here and to learn from everybody that's here as well.
All right, and then Chris, do we have Chris on here?
Yeah, can you guys hear me?
Oh, there you are.
Chris.
All right.
Man, IT guy finally got the video going a little bit. So I'm also part in Austin, Texas, part of the MFM Austin chapter, co-hosting with Daisy and Luke. So 204 unit in San Antonio, Texas. Nothing sizable like other guys here in chapter. So realtor also since 2014, have my own small brokerage firm here. So if you need help in Austin market, San Antonio market, reach out to Daisy, Luke, and myself, and we'd definitely love to help. Okay.
All right. Thank you, Chris. So I think that's everybody. So with that said,
Is Luke going to introduce himself or what?
Yeah, okay. I apologize. I thought, okay, you want to go, Luke? Sorry.
I'm
Daisy
married.
did
So
such a great
Daisy,
job. So
I know.
no, I'm married. Daisy spoke for me, so I'm good. If anybody has any questions, just reach out to her. I'm just the guy in the background who does all the support. So no worries.
And no passport.
And no passport. I'm currently passportless.
He's trying to rectify that problem. All right, he's going to get it sorted out.
Hey, Luke, I'm married for 13 years. You'll get used to it.
All right. So with that said, I think we got everybody now. Sorry, it's first time, working out the kinks of the additional group, but we'll figure that out. But with that said, I know we're all here to learn about talking about what it takes to raise money, right? And luckily, our panelists have already introduced themselves, and so I'm not going to do the full intros again. But for those that don't know, right, our panelists today is going to be John Monteiro, Ben Suttles, and Ronny as well, right? And we're going to basically kind of dive in a little bit on what it looks like to kind of get started. And I really want to focus more on what it's like to actually do the raising money part of the business, right? What do those conversations look like? What things do you do beforehand to prep, right? How do you meet these people, right? And how do you continue to grow that audience? I think those are the key questions that I think, people that are new to the business are interested in. And so I'm going to focus on those. And so with that said, Ben, John, and Ronny, in that order, do you guys mind giving another 10-second introduction focused on that? And really maybe the brief intro on how long you've been raising equity for, right? Maybe kind of the first point, so people can kind of get some context, right? And what attracted you to the business in that sense? And the third piece of that is, let's just do just those two. So who you are, how long you've been doing it for, and kind of what attracted you to it. You got 15 seconds, Ben, go.
15 seconds. All right. It's going to take me a little bit longer than that. Oh, ouch. I'm under the gun. All right. So been doing this since 2015, raised probably about 25 million at this point. For a lot of people kind of know my story. Some people that don't, right? Kind of came from the sales and business development background and did a lot of presentations, pitched a lot of things, did a lot of networking, went to a lot of conferences. And what are we doing now, right? We're doing a lot of the same thing. The product and the service has changed, right? But I'm essentially doing the exact same thing, right? Which is essentially selling an opportunity, to investors. And so I'm kind of in my skin when it comes to this type of stuff. And, that kind of comes across when you're raising equity. You need to be able to own it. You know your numbers. You need to be able to pitch it. People are looking for confidence. If you've got confidence, then they're going to have confidence in the deal, right? They're going to have confidence in the team. If you stumble around and you don't really know your numbers, you don't really know the pitch or the deal, people are going to be like, does this guy or gal really know what they're talking about? Do I really want to give them my hard-earned retirement money? So that would probably be my piece of advice. People that are starting off, get your 30-second pitch down, right? Know that first deal that you're going to raise money for, because that's the most important thing. People invest in the team more so than the deal. So you just need to understand that.
All right, thank you. And luckily, you don't lose points for going over time. So John, same question to you.
Yep, like I said earlier, John Monteiro, I'm based here in the Dallas area. I've been in real estate for 25 years, raising capital for over 10. Why do I enjoy it? I enjoy helping other people, achieve their goals. I know the topic is about raising capital, but I actually, and I say it all the time, I don't like the term raising capital because that infers that I'm taking something from you, when all I'm doing is providing education and opportunity. And if it's a right fit for your goals, then let's have a conversation. And then at the end of the day, it's really about knowing, liking, and trusting the person that you're going to be working with as a sponsor. So it takes time to build those relationships and the trust, to be able to partner with other investors.
And I think that's a very good point, right? And we'll get into this, but I think a lot of people do look at raising equity as taking something, but it's really, turn the tables. It's more about you're presenting them an opportunity. And honestly, investors one of the deals that we've done full cycle, I mean, those investors did phenomenally well, right? Some of this is life-changing for those people. So good points. All right, Ronnie, same question.
And if everybody could kind of mute themselves, let Ronnie do his thing.
Okay, so I've been in multifamily since 2017. Started raising equity end of 2018 across all our deals. We've had over 13.4 million in equity deployed. So that's my 15 seconds.
Whoa. You could take more than 15 seconds, man.
He gets a clap for being the only person to stick to the rules, all right? I'll take it. So, okay. Kind of John alluded to this a little bit, and I do want to dive in on that point, right? So we'll come back to how do you find these investors, right? But maybe my question is ultimately, what are the conversations that you have and how do you have them? Right, John, I want to start with you. So let's say, let's take the email list, the audience growth, all that off the table. But let's say that I'm a potential investor and we go out for coffee, right? What does that look like? So John, you first, and then we'll go to Ronnie and then Ben.
And Feras, can you mute everybody real quick?
Yeah, I'll go ahead and mute people, Ben, and then.
Hold on, John.
All right, John, you want to go ahead?
Okay. So when I meet with potential investors, it's really not about me, it's about them. So I always kind of start with understanding who they are, what's important to them in their life, what their goals are with regards to investing, whether it's for cash flow appreciation, what asset class they're looking for. Really kind of ask them a bunch of questions, learn about what their needs are, and then from there kind of offer up potential solutions around what may be a fit. The last thing I want to do is try to fit a square peg in a round hole. So I always try to start with the investor first and try to figure out what exactly their needs are. In many instances, they don't know. And so you've got to ask them a lot of questions to kind of dig through a lot of those unknowns and help them surface what their true needs are and see if you can provide a solution for them.
Yeah, and I want to echo that a little bit, right? I think it's very, very important to match the right investor to the right deal, right? John, as you know, some deals have, let's just talk about a grind up development. There are no returns on that deal for several years, right? You have to believe in this deal. You'll see the returns 2 or 3 years later. If that investor is skeptical, they think that, that this is never going to work, blah, blah, blah. That's probably not the right deal to get them into, right? Instead, maybe you get them into a deal, lesser returns, more cash flow up front, right? And so being smart with your investors is how you can also sustain long-term growth, right? If you get the investors into the right deal, those people become satisfied sooner. Those people tell their friends, and that's the easiest way to grow, right? So.
Yep. Right.
Ronnie.
Feras, could you repeat the question?
The question was ultimately, let's say I'm an investor, I'm an investor, right? And we go out to coffee, right? What does it look like in terms of the conversation that you have, right? Is it how do you pitch it to me? How do you discuss it? What kind of thought process do you go through?
I think first, seeing what their expectations are. So Feras, let's say I meet you at a conference or a meetup, right? And you're interested in investing in multifamily, and you've probably invested in a few deals before. So first thing I do is identify what their goals are, understand what return profile that is, cash on cash, IRR, equity multiple, what types of deals they invest in. Is it class A, B, C, new development? Do they invest in single asset, or do they invest in funds? And really understand that, what markets they invest in, and then try to see all that up front, and then show them what the real expectations are, because over the years returns and things change, right? So right now, for example, pre-COVID, I was all about B and C class. Now post-COVID, I'm all about vintage class A. So deals built between 1990s to probably 2015, garden style deals in the Sun Belt region. I'm not so bullish on B and C class in Texas anymore, or Georgia, for example, right? And that's what the entire portfolio comprises of, right? So, for example, on B and C deals in the past, we're expecting like 8 to 10% cash on cash generally, right? In Texas and Georgia. But what I've seen lately with property taxes and insurance and whatnot, it's returns are lower, right? When it comes to some of these deals and stuff, just across the board from other sponsors and whatnot. So really setting the expectations and then showing them what your vision is, right? And making sure you can match the opportunities. So I have buckets for different investors. I have new development investors. I have fund investors. I have A investors, B, C. And that's kind of how I do that. And it actually takes a lot to get to a in-person meeting. I try to do all this over the phone, and that's how I do that. So,
Yeah,
and I can go through more of the process.
Yeah, you said one thing that's important though. It's qualify the investor and figure out what they've invested in, right? Because ultimately you're trying to build a persona, right, of who this investor is, what kind of things they look for, and start with saying, you know, what have you invested in? Oh, I'm a guy that only does stocks. Okay, great. That person's probably a little skeptical, right? Oh, I'm someone that only does REITs. Okay, you want to probably focus conversation on pros and cons of REITs, right? And so from that, you really start to learn and kind of gauge what might be a fit for that person.
And one key thing is segment your investor list, so that way you can have targeted campaigns versus general. I think that's really important. Let's just say, for example, John's a great example. He's very bullish on Texas. I would never send John a Georgia or Florida deal, right? Because John only invests in Texas, and that's his thing. So I think you really have to understand and take detailed notes of every investor call you have. And that's how you can be sustainable and grow. Like as you grow like an investor relations team or whatnot, you got to scale your relationships just outside of you. So documentation is important.
Good points. Ben, yep. Same question.
I mean, these two guys really touched on a lot of things that I probably would have said, right? You know, I mean, I think
I made it hard for you intentionally, dude. We need to get down to deeper level here now.
So let me point out some of the things that I agree with. I mean, I agree with all of it, but let me just some stuff that I think is the most important, right? Which is, you know, understanding the investor, right? You know, what are they looking for? Painting the right expectations. I liked where Ronnie said segmenting your list, right? You know, I mean, a lot of people, if you're not building an email database now, you should be doing that. That's the first thing you should be doing. Take all those business cards out of the drawer, you know, get those online and get them into an email campaign and start talking to your audience. I think that's important, right? And by virtue, you'll start understanding where people are more bullish, right? You know, the people on your list are going to be more about Texas deals, or for people that are not in Texas, maybe you're, you know, in California and you're, you know, the people that you're talking to only want to invest in Phoenix, right? Something like that. So you need to understand your investors and who you're talking to, and ultimately putting the right deals in front of them, right? Because, you know, if all your investors want to do garden style B and C, and all you're doing is bringing them new development deals, they're not going to invest with you. So you need to be talking to the right folks. You need to be, you know, giving them the right message, and you need to be painting the right expectations, because, you know, Ronnie also brought up a good point, right? You know, everything that we do is it's projections, right? But you can't, after 2-3 years, it's hard. You don't have a crystal ball. Nobody even back in February of 2020, knew that COVID was going to shut down the whole entire economy for more than a year. I mean, a lot of people are still dealing with it, right? So you need to also be able to get them on the phone and be open and candid with them. People love transparency. And so they need to understand, like, hey, you're going to hear from me, good, bad, or ugly. You might not like what I have to say, but I'm going to at least tell you. And people tend to gravitate to that because they know that you're being honest and transparent with them, right? And if you can build that rapport up front and they understand what to expect from you, then they'll take the hits, right? If things go a little bit off track, they'll understand, right? Because you're talking to them and you have built that rapport up over the years before they've, invested with you. So, both guys really pointed out a lot of the things that I would have done.
Well, you went into a topic that is important that I expected someone to bring up, but no one did, which is how much do you focus the conversation on educating the investor, right? And is it good to educate the investor or not, and kind of why? Right?
I think it absolutely is, right? You have to educate them on not only the pros. I think people get caught up on the pros, right? And anybody that follows us knows that I'm probably pretty candid, and I'll talk about the cons probably more so than people want me to. But they need to understand that what we do is inherently risky, right? The PPM, the document, if anybody's ever read one, it's 97 pages of talking to you about the risks of investing in the deal, right? You can lose your whole entire investment, right? So you need to educate your investors, not only on the good side of the deal and why you like the deal and why the team's great and why the location, but hey, here's some of the risks. But Mr. and Mrs. Investor, this is how I'm going to mitigate those risks, right? So you educate them on how you're trying to de-risk, as John likes to say. I love that term, de-risk the deal, right? And you can educate them in that sense too, right? So if things do go off track a little bit, they understand, okay, something happened with this or that, but I already know that the guys or the gals have the plan in place to mitigate that. So I think education is key, because if they don't understand what they're investing in, then they're going to have this pie in the sky expectation, and anytime things go off track, they're going to be the first ones calling and saying, I want my money back, right? And you need to understand that's just the ebbs and flows of how these deals work, right? It's not like a straight line, like a rocket ship, like people think that it was, especially this decade, right? This is the operator. We got a lot of appreciation thrown to us last decade, and people need to understand that, yields are going to be a little bit tighter, and you need to really be able to strap in and understand that whoever is going to be operating these deals the best are going to be the ones that are going to be the most successful. So educating them on that process is important.
Feras, if I could jump in and add one more thing about education, and this is an actual example of a meeting I had today with an investor. And I think this is important to understand with regards to taxes. A lot of investors are accredited. They're doctors, dentists, engineers. They're high income earners, and they've got a tax problem. Yep. So not just focusing on cash returns and ROIs, but also educating them on the benefit of the tax advantages of multifamily and depreciation. Because at the end of the day, not only do they have money to be placed into deals and that they want to return on that money, but the benefit of the depreciation that we're able to take to offset some of the tax burden that they have as a W-2 income earner is really important. And most investors don't know that half of the story.
No, that's huge. Yeah, actually, I wanted to second that. That's big, right? And that's part of the education process, right? Is, the why we love commercial real estate, right? And it's not just cash flow. Everybody, cash flow. We get it, right? Everybody loves cash flow. And nobody's going to deny that mailbox money is not a great thing, right? But there's other things like John mentioned, right? Depreciation is huge. There's a fair amount of tax benefits to go along with it too. And you need to educate people on that as well. And people are going to appreciate that, right? Because high income earners, they have different problems than us, right? Taxes is being one of them, right? And so if you can steer the conversation to solving their specific problem, then they're going to be a little bit more apt to listen to you, right? If you go right into cash on cash and think everybody wants to hear about that, you're wrong, right? So you need to study who you're talking to, right?
Yeah, and I want to expand on that actually a little bit, right? Because, I like to tell people real estate, it's extremely valuable in the long run. The problem is it requires knowledge, right? You do need to learn real estate, really the pillars of real estate, right? I come from tech, and Chris could probably vouch for this too. Our people, most people nowadays, anybody, even if you're not in tech, what do? The first thing they do is go search Google, right? Real estate versus stock market. Oh, great. Stock market has appreciated 10% the past 50 years on average. Real estate's only appreciated 2% or 3%. Oh, clearly real estate's a terrible investment, right? That's the mental process most people do. So you have to kind of break that with any investor. And this is where it goes to what we started with, which is understanding the investor you're talking to. If there's someone that's only in stocks or someone that is experienced, right? But really help them understand the different pillars, right? What does it mean to get appreciation, get depreciation, get paid out of the note, get cash flow, right? All of these are different things that turn into a very powerful investment, but it requires an educated investor. So I think, that educating investors to me is a really critical part of it all.
Absolutely.
All right. Well, so with that said, we'll shift gears a little bit. Let's talk about finding and meeting investors. So the question for each of you, right, is a couple things. Favorite place to source investors, and as well as that can be different than the best place to source investors, right? Your favorite can be different than the best. And so, I'm going to ask each of that question. Who wants to answer first? So both of you guys kind of have a weird look on your faces.
That's just how I look, man. What are you trying to say?
That's very true.
No, Ronny does a great job of this. I want to hear Ronny. Ronny, you answer this question first, man.
So top sources for finding investors, conferences and meetups. I'm pretty good in person. So back in 2019, I'd go to every conference, every meetup. If y'all are from Dallas, y'all know I show up to pretty much every meetup, right? And I'd come down to Houston and visit Ben and Feras at their meetup too. And that's how I like it. I like the virtual ones as well because we get to see people from all over. But probably my favorite one is when investors trust me and refer me their friends and family. That's probably the highest compliment. So yeah, those are some of the top sources for investing. Another thing, social media has worked really well.
I was waiting for you to say something about that.
Yeah.
Oh yes. So social media.
Conferences cost money. Social media doesn't, right?
Yeah. So social media, Facebook. I used to do Facebook Lives. I've had Ben and Feras on one of my shows. Studio style type stuff. That's one thing. And then we'd shoot videos in Atlanta, boots on the ground. If y'all want to check it out, just go to ronnyphiliptv.com and I'll direct to my YouTube channel. You can check it all out on there. And a new platform is Clubhouse. Right now I have a little over 23,000 followers on there. And I actually do a fundraising one every Tuesday at 7 p.m. Right. But now we're doing it on Zoom. So that's been a good platform. I actually met more institutional investors than I did, just high net worth investors, which was pretty surprising. But I think if content and you're omnipresent, that's the best way. And you have to track all this stuff too, right? So let's just say I meet Ben on Facebook. There's a tag in my CRM Facebook, and I met John on Twitter. Kind of the same thing, right? That we're tracking, and then you can see where to spend your time on. So those are my sources for.
No, I love it. Yeah, and I'll get in. I mean, Disrupt Equity has its own marketing that we do, right? But kind of going old school because that's just the type of guy I am. I like going out to events as well. I like meetups, right? I think conferences, especially the bigger ones, you can kind of get lost in the crowd. And when you're amongst 300 people, and we know a lot of people, you'll still roll up in there and you'll be a little bit intimidated, right? Whereas a meetup tends to be a little bit smaller, right? You might know a few more people, you can get, a little bit easier introductions. I like the meetups, right? I like, because and ultimately anything that's a little bit more laid back. I think you tend to be able to build rapport with people when you're breaking bread, maybe having a drink or two. It's a little bit easier for people to kind of open up and be a little bit more candid and really get to know people. That is what it's about. It's not this transactional thing, right? People think it's like, oh, I'm going to go out and if I get 100 business cards, then I had a good night, right? That's not what this is all about. This is about building business relationships and true friendships with a lot of these people and being able to provide these opportunities for them, right? So if you always look at it through that lens, then you're gonna appreciate those types of events, right? But social media has been big for us, right? Just like it has been for Ronny and John. John has a great following too. so you can't discount that. And especially in this, I don't know, I'm going to call it post-COVID world that we're now living in, right? I think we're still dealing with COVID in some places, but here in Texas, it's a little bit more opened up. A lot of things are online, and you need to be online if you're really going to take this seriously. There's a lot of good platforms, Clubhouse, LinkedIn, obviously Facebook. You need to get a marketing plan in place, because that's where you're going to meet people that you wouldn't traditionally meet at your local meetups. So best I like is definitely, my most favorite is going to be the meetup for sure.
All right, John.
Yeah, I'm just going to repeat exactly what the guys said. In-person meetings are really great. I actually went to a 200-person, 300-person live event for the first time since COVID started about a couple weeks ago. It was great just to be in person, face-to-face, and building relationships that way. Meetups are great too. I can't wait for our MFM chapter meetups to start up again soon, hopefully in the next couple of months. Online webinars, sessions like this are a great place to meet folks. But for me, I guess my favorite and most successful is social media on Facebook. So I have a Facebook group that I started 2 years ago, Texas Multifamily Investor Network. And my commitment every day to the community is posting a relevant article or data around Texas, the economy, multifamily statistics every day at 8:30 in the morning. And I've done that for the last 2.5 years. And fast forward to today, we have over 7,100 folks on the Facebook group. So I would just say, create a platform. It could be podcasting, it could be Facebook Lives, it could be Facebook groups, it could be on LinkedIn. But create a platform and then be consistent. And when I say be consistent not in just terms of your messaging, but in terms of your values as well. Because people want to know who you are and what you're really about before they start to dive into your deals. So just be consistent again on your messaging and your values on an ongoing basis. Create that platform, and you'll meet a lot of great people.
No, and just to add that, I think consistency is great, right? And I think that goes to my earlier statement, which is about building an email list too, right? You have to be consistently talking to the folks that, so if they're not following you on social media, you don't have a platform like John says, or you don't have a show, or you need to be talking to them, and you need to be providing value, right? So whenever that deal does hit, you're top of mind. That's the most important thing, right? Because, that person that I met 3 years ago at a networking event, maybe we had dinner, we had a great conversation. I would have put that guy, he would have been $100,000 in if I had a deal the next 2 months. But guess what? That was 2 or 3 years ago. He forgot about me because I'm not talking to him. And so you just kind of wasted that lead, that opportunity for that investor. So, but if you're talking to them, maybe you have a newsletter, right? Maybe you have a show, maybe you're doing a Facebook Live, whatever it might be. That person remembers you, continues to remember. Oh yeah, I remember Ben, yeah, we met at this and that, right? And so whenever you do finally have that deal, they still remember you. That's important. So I think consistency is key here as well.
All right. And then maybe one more question quickly for each of you. Of all those places, what place have you raised the most money from?
Ooh, referrals.
That wasn't one of those places, man. That's not a place.
I'm just saying. I'm just saying that. And Ronny brought this up, right? I mean, that is a great place. I mean, and me and Feras, we've talked about this too, right? We can tie back, I think, 30 of our investors to one guy. He did
sometimes more.
Yeah, maybe even more at this point. This guy did a phenomenal job of putting people onto us, and all of those people ultimately ended up investing with us, and we'll be forever grateful for him. But that's the most important thing, that if you can build those true, genuine relationships, and you can deliver on what you're telling people that you can deliver on, they will go to bat for you. They will bring in their brother-in-laws. They will bring in their sister-in-laws. They will bring in their parents and their colleagues and everybody else. They'll say, man, I just made a ton of money with this guy or a gal. You need to at least talk to them. And guess what? Now it's no longer a cold lead, right? It's a warm lead. And now they're teeing up these investors. So I'd say I've definitely raised the most money off of referrals for sure.
It's also the easiest money to raise.
It's definitely.
John, Ronny?
For me, it's Facebook. in my Facebook community that I've built up. Again, just being consistent, with your messaging, giving, not asking. And I run into people at live events or they reach out to me and they always say, I feel like I know you. It's so great to meet you. And so you've almost kind of built that personal relationship with them virtually. And so Facebook has been a great tool for me.
Nice. Do you give Uncle Zuck a referral fee for each lead raised?
I need any money? Screw Uncle Zuck.
All right, Ronnie. Anything else?
It was actually a tie between in-person events and social media. Now that I think about it, so both of those have been really effective for me. And I think just focusing on the ones that work the best and scaling it, right? So those two have been my.
Right. All right. So if anyone has any comments, questions, please go ahead and leave them because I will shift gears here in a minute to moderating. But I did want to kind of go into one more topic, which is for each of you. I know Ronnie alluded to this a little bit, but so finding investors is one thing, but how do you track the investors, monitor the investors, and maybe to go further than that, do you do something to try to continue to add value to them, right? Because again, a big part of this is, Ben mentioned you might have talked to this guy 2 years ago, right? And there just wasn't the right fit for what they're looking for. How do you keep that conversation going? Any of you, whoever wants to.
I'll just say you have to continue. I think John brought a good point, right? You have to continue to add value, right? And you have to stay top of mind, right? Don't just putting it. I think I'll use his platform as an example, right? So if John just put out random articles just to say that, hey, I'm posting in my platform every day, that's not adding value to people, right? But he's putting out relevant content that people that are following him want to hear, right? About Texas, about the economy, about multifamily. That's adding value. I mean, I've clicked on a ton of his stuff, right? So you can imagine that an investor, if you want to have them, engaged, you need to be for providing value in some way, shape, or form, right? And so, we do that through weekly show. We do that through a monthly newsletter. We're constantly trying to, provide something that's going to keep people engaged and also add value to them. So whenever we do have that opportunity, they still remember us, right? And I'm glad that we really doubled down on that over the last 12 months because we haven't been able to really cultivate those in-person relationships because of COVID. So you really do need to probably, think through a whole marketing plan and how you're going to keep those people engaged, because that's the only way you're going to retain the investors that you might have met over the course of the year. I know Ronnie's got some great points. Ronnie, you're good at this, man. What would you add?
Yeah, as far as staying in touch with investors, my motto is my investors become my friends and my friends become my investors, right? So, I mean, have a set goal of how many people you want to reach out to, every week. My goal is 20 to either brand new investors or people already in my database. And if I do that for the entire year and I take 2 weeks off, that's 1,000 people right there, right? So I think the closest relationship wins when it comes to, let's just say I have a deal and John has a deal, right? And they're pretty much identical as far as return profile. But let's just say I have a closer relationship with the investor than John does. More likely that investor will invest with me, right? So I think cultivating those relationships, really getting to understand them. And I
agree.
And for me, like I said, I post every day in the Facebook group. I send a weekly newsletter via email out on a weekly basis, and constantly having conversations via direct messages, texts, scheduling phone calls. If the investor is local to DFW, now kind of getting back into face-to-face meetings, coffee, lunch, breakfast, etc. So it's just like I said earlier, just being consistent, just working at it every single day, and being an educator first and adding value first. And when the right opportunity comes up, that investor will be ready to make a move.
Right.
One last thing I'd like to add. There's multiple ways in having touches with investors, right? Social media, emails, and find out what's the preferred contact method. I think that's pretty crucial. See how they communicate, right? And study communication too whenever you're communicating with investors, right? So I think that's pretty crucial.
No, I think actually I wanted to add to that. You brought up a good point, right? I mean, a lot of people do text messages. Some people, don't like emails, right? Some of our, older investors, they love a phone call, right? So you have to like really study, where they're at in their life, right? And what kind of communication they would actually care about, right? I mean, we've got some investors that I know damn well aren't even on Facebook, right? But at this point, a lot of people are. But, you can kind of get my point that they won't even see the content that we're trying to put out or the value that we're trying to add to them, So in that case, we have to also have different ways of communicating with them. So I think that's a good point, Ronnie. I know people got questions. Ask.
No, so there are questions. So I'm about to shift gears. So I'm going to go ahead and shift gears to Q&A. So people have questions, go ahead and ask them. I will start to moderate. So one of them I got directly sent to me, which is question, how do you track and qualify prior relationships with investors if you are doing a 506B offering? So first of all, maybe someone explain what a 506B is, what a 506C is, and then one of you can answer that question.
All right, well, I'll start with the easy one. So 506B, there's different SEC offerings. What people have to understand when we're talking about syndication, we're selling shares of a company, right? We don't have an SEC license to do that. So there's certain regulations that we have to follow, one of which could be a 506B as in boy offering. And in that case, we have to have a pre-existing relationship with any investor that's going to invest in that project, right? And what is pre-existing? You got to look it up. There's a lot of, myths out there about 3 touches and all this other crap. But I always look at it like you got to have a conversation. Right. You have to, you have to have met that person and had a conversation with them that's pre-existing. And you've had to have done that prior to having the deal under contract. Right. Also 506B, you can only take on 35 sophisticated investors, as many accredited as you want. On a 506C, which people think is all cool because you can blast it on social media. It's actually only 1% of all the offerings that are out there. And in that case, you can only take on accredited investors. And once again, people can look that up. It's all over the internet what an accredited investor is. So hopefully that answered the first part of that question.
All right. Who wants to answer the second part?
What was the second question again?
The question itself is, it's really how do you, let me go back and read it. It was, sorry, it was, of course, now that I want to find it, it gets lost in the abyss of everything else. It was essentially here it is. How do you track and qualify them if you are doing a 506B? So ultimately, you're meeting people. How do you make them qualify for 506B?
Yeah, I mean, I think it goes back to what I just answered, right? You have to have a pre-existing relationship. And really, going back to what Ronnie mentioned about tags, right? You should probably be tagging them. I mean, I know you don't want to come out and ask people, are you accredited or sophisticated? Some people are just going to go out and offer that information. And anybody that you find out who that is, you should probably tag them as accredited or sophisticated as well, just so you have that information.
All right.
Cool.
But I think the other piece of that too is meeting people beforehand before you have an offering, right? That's maybe the
pre-existing relationship, right?
Yeah. But I mean, I guess maybe, what does that mean, right? It's ultimately someone you've met with, you've talked to. It's not you're doing just a blind market, right? Someone that you have interacted with that meets that pre-existing relationship kind of status.
Mm-hmm.
All right, let's keep going then. Next set of questions we got was, what CRM and email campaign systems do you all use?
Okay, well, we've got several. Our email system is ActiveCampaign. We've also used MailChimp in the past. We like ActiveCampaign significantly better for various reasons. CRM, we've got a couple different ones. Nimble is the one that we use for our investors. You guys can check that one out. We also have used Zoho, so I think Zoho is probably a lot more powerful than Nimble. Nimble's more kind of social media, kind of driven. So you can check any of those out, would probably be a good one. Ronnie, John, what do you guys use?
I use Active Campaign.
Okay.
Yeah, I use MailChimp for my email service. For the database, it's a plugin off of my website. So I've got an admin plugin for my website. So able to manage a lot of my investors that way. A lot of my other co-GPs that I partner up with, they use, Syndication Pro. They use Juniper Square. So there's a lot of different options out there.
Right. And then next question, also CRM related. What are some key things you include in your CRM system to help streamline back office operations?
I'm not following that question.
Here, I'll answer it. So for us, tagging investors, segmenting your list, knowing where they came from and what things are relevant to them, right? If you want to add value to the right people. Don't just do it to everybody, right? That's kind of a big one. In addition to that, just pipe it through the rest of your things, right? And what I mean by that is our contact form turns into a lead in the CRM system, which then if we communicate with that person gets flagged elsewhere, right? CRMs can be very, very powerful, but it does take work and effort to set them up. And so you start to tie them together, you're kind of threading the needle between these different systems, right? So that's maybe the answer I'll say. I don't know if anyone else, John or Ronnie.
You answered that one pretty good, man. Heck yeah.
All right, let's see. Next question. It is, love that you all have thousands of investors in your database. What apps do you use to keep track of all of the same investor messages? When the same investor messages you via Facebook, LinkedIn, Twitter, and a different platform on a different day. Don't you forget a key conversation?
Well, I mean, I think
that one too, because that one's kind of tricky. It's what they're saying is basically how do you track the same investor across different systems, right? And ultimately, that's up to you and your diligence, right? Are you diligent about going back and taking notes? Like Ronnie is very diligent about having notes on every single person he talks to. I don't care where you came from. You still have the same name, right? You are still Ben Suttles or whoever you are, and I still take notes. And so it's about being diligent, but also being smart in the sense of notating where this person has been communicating to you from, right? Because that may be valuable later down the road, right? Like a lot of CRM building, a lot of it is not about what is valuable to me today, right? It's what could be valuable to me in the future, and kind of have that lens. And really, because again, someone asked me this actually on a podcast interview, is, outside of I wish I would have bought more real estate. Like what if you could go back in time, what would you have done differently? And for me, it was ultimately, I came from the tech world. I know a ton of tech people. I wish I had started building my CRM, cultivating that audience much sooner in life, right? So,
no, and I second that. And Feras always tells the story about, I had started this meetup 6 years ago, and Feras could never believe that I didn't have a check-in sheet, I didn't have name tags, I did not track anything. It was, the most backwards way of doing a meetup,
not a consistent date of the month. It wasn't even monthly. Like everything was wrong.
So you just, to his point, right? I think back, and I was doing that for several years. I just think back at all the missed opportunities of people that I met, and maybe I lost their business card, or I didn't follow up, or maybe they didn't have a business card. A lot of people go to these meetups and they don't have business cards, which is very odd to me. And then nobody ever follows up with anybody, and then that's just a lost opportunity. So yeah, I would agree with that. If I could have started earlier, really tracking this stuff, it would have been pretty powerful.
All righty. Next question. We've answered that one. Let's see. What has been your biggest mistake / learning lesson in a past capital raise?
Okay, so what has been the biggest mistake? Taking money from shouldn't take money from, and what does that mean? Not people that didn't have the money to spend on the syndication, but people that were ultimately going to be a big pain in my butt, right? And we have since learned that mistake. And you can always tell I'm a salesperson, and this is me being candid. Feras is probably cringing here, but this is what you have to understand. If they're complaining, they're asking a bunch of questions, and they're really just picking everything apart, you really need to think twice about taking their money, because the first month in, they're going to be grilling you, and they will be grilling you for the life of the project. And if anything goes off track, and I'm talking about anything, they will be all over you. So you don't need their money. You can tell them to go find another project. This is not the right project for them. You just need to bite that bullet. And that's what I did when I was a salesperson too. I could smell that customer a mile away, and I just wouldn't do business with them. So that's probably been my biggest mistake, is when I was starting off, you're trying to, raise money, you're taking everybody's investment, right? As long as we have a pre-existing relationship. And I no longer do that, right? I'm very picky about who invests in our projects.
John, Ronnie?
Yeah, for me, it's don't try and sell it too hard. Provide them the opportunity, and if they feel like it's a good fit, then they'll let them make that decision. But I see a lot of folks out there just kind of working a little bit too hard to try and get somebody in their deal, when ultimately it's probably not the right fit, to Ben's point.
Yep.
Yeah, and it shouldn't be a hard sell, period, right?
No, absolutely
Right.
not. And that's what you'd have to understand, right? And I think you brought this up earlier, John. You have to shift your mindset. I think that's actually a big takeaway from tonight, folks, is that you are not selling them anything. You are giving them the opportunity to invest in a great project, right? Just think about that, right? So if this person is wanting you to sell them, I would move on. Find somebody that's like, man, this is a great project. I'm excited about this. Let's do this, right? Because all of the information is right there in the webinar and the investor deck and the PPM anyway, right? And most people, okay, you want a T12 and a rent roll, that's fine. I'll give that to you too. They have enough data to make an informed decision. They don't need to grill you about 51 questions and why do you think that you deserve my $50,000 investment, right? Spin it the other way, right? I'm giving you a great opportunity to invest in. If you don't like that, or you don't see the value in it, then there's probably a better project for you. That's how I'd look at it.
All right, and we're coming up on time, so we're gonna do one last question. And this is probably a good question to end it also. Thank you, Luke. What part of raising equity do you all enjoy the most? Maybe each of you can answer that one.
The relationships that we build. Like I said, this is not about this transactional mindset, right? I am friends with these people, right? I'm asking them about their children. We're going to masterminds together. We're hanging out and having a beer together. That's actually what I enjoy the most. That and finding deals, right? Is that relationship component of real estate, right? And you really need to. That's the most important thing that I enjoy. I don't know about the other guys, but that's mine.
Yeah, I would echo that. It's all about building relationships, building friendships, meeting new people. I see Trevor on the call. I remember Trevor emailed me one day. He said, "Hey, I'm going to be up in Dallas. Can we meet up?" And we met at Mi Casina. We had some Mexican food together, and I just remember the initial conversations that I have with people, and now we stay in touch with each other, and we've built a nice relationship. So you just take that and multiply it, by dozens and dozens of other people. It's really satisfying.
Yeah, I would add, relationships. I think that's important, and creating results, right? Really telling people showing people what we said we're going to do, right? And exceeding expectations, so I think that's important. And on top of just in multifamily in general, we're building communities, right? We're taking these B and C class properties, we're investing in them, and we're creating a good community for them. And Disrupt Management does a great job on the property management side on that for us here in Texas. But that's another thing as far as raising equity. I just love doing it, right? Like it's a challenge for me, right? Like my goal is eventually to raise $1 billion, right? So it's how far can I push myself? So that's another thing.
I like that goal, man. I like that goal. That's hairy. It's very hairy, my friend. Kind of like that beard, man. That's probably why. See, I got a smile out of him. There he is.
So then I guess with that said, thank you guys for participating, right? Kind of definitely a wealth of information. I think there was a ton of information people hopefully picked up on. If not, the recording will be out, so people can definitely check that out later. All right, so appreciate everyone kind of taking time out of their evening. For those that have not been to this before, we are going to transition to breakout rooms. And so what we're going to do is break up the audience into groups of about 5 to 8 people and, put you guys in that room for about 10, 15 minutes, right? Give you a chance to network, meet people, and, share ideas, share what you're doing, share where you're from, right? That can turn into a John and Trevor type relationship. And so please stick around for that. Like we like to say, multifamily is a team sport. And this is how you help build your team. So with that said, I'm going to go ahead and kick this off. All right, there's everybody else that you're asking about. So welcome back, everybody. We still got 40 strong. So proud of everyone's networking prowess. Hopefully soon we can all meet in an in-person event. But in the meantime, thank you all for participating as part of this. Hopefully people got some value out of this. And we look forward to seeing you guys again next month. So in about a month from now, we'll finalize kind of the dates and the details, but we'll share that out to everyone that has attended. And we hope to see you all next month.
And one last thing, just to kind of close out, if you guys ever want to save the chat, it's those 3 dots right there by the message, and so you can get everybody's contact information and follow up accordingly. But we look forward to seeing you guys next month. Thank you for tuning in.